Hello traders, Gary Wagner here just after 1 o'clock in Honolulu, 6 o'clock in New York. It is Monday, January 27th, 2020, and this is the Daily Report for Gold and Silver. A continuation on Monday of the major concerns that began to unfold over the last couple of weeks. This concerning an outbreak in China that has killed, I believe, 36 to 50 people. 2,500 are sick, and more importantly or scary is the fact that these cases are now showing up in other parts of the world, including the United States. That being said, the major concern is if this virus spreads to any length of a pandemic, any small portion of it, we could see a major global slowdown that would affect a multitude of the financial markets. It, of course, would be bullish for gold, but the price we would pay for that bullishness, I don't think really is worth it. So we'll hope that this is something that can be resolved. We did issue a trade recommendation on today's show. I'll talk about that in detail because we modified the model we were looking at last week over the weekend. But first, to the price board. Interesting activity in the precious metals markets and in U.S. equities. U.S. equities selling off dramatic today, with the Dow losing well over a full 1.5%, S&P doing the same, and the composite losing almost 2%. We are looking at the continuous contract of gold futures. It currently represents the February contract, but that is going to be shifting over into the April contract, which is why the trade recommendation we put out today was for April gold. As we look at Feb gold right now, $15.7960, up $2.20. But we entered a position when we recommended going long at $15.85. The market's at $15.8590, up $2.20 on the day. Platinum traded lower, losing about 0.4%, $987.90. Silver gained very, very fractionally, penny and a half, 1807. And finally, palladium, it does continue to climb, $2,182.80 after a add-on of $9.20. Let's take a look at our chart so I can talk to you about why we triggered the buy signal and slightly adapted the current model we have been looking at. Traders, with such a quick turnaround last week and a profound upside move in gold, I did some extensive analysis over the weekend and came up with a possible model that is within the corrective type of a zigzag, although it is called an irregular zigzag. I'll explain that in a second. But what really prompted me is the level of this open here, as well as recent tops. Let me get the proper color pen to draw that in. And what we can see is that it pretty well lines up. We close right at it, and we did trade above it. That tells me that there's a distinct possibility that this market could run a little bit higher, maybe even challenge 1613, and then begin to come down. And now we'll talk about the irregular type of zigzag pattern. Traders, as you know, the model that we have been talking about throughout last week was the really strong potential that we would see some sort of an A, a B, and then a final C, which is called a zigzag wave, a corrective wave that took 3 waves to move to a lower pricing. There are basically 2 variations off of this type of a correction. One is simply called a flat. And when you're looking at a flat, in essence, what you get is a very similar A hits a bottom. It then has a normal B, meaning going to 50 to 75%, that of A. And then on the final leg down, the reason it's called a flat is you get these equal lows down here. It's a fairly common occurrence, and it is a standard pattern that we look for. Now, another type of zigzag pattern is a irregular or asymmetrical. And the key to that one is this. A wave is going to be simply the same, but your B wave is going to do something unusual in that it will exceed the top of this conclusion of a 5th wave and then come down either as a flat or a little bit lower. Typically, when you get this kind of an irregular, you will get what's called a flat bottom because it's made that exaggerated move. The reason I believe that there's a potential for this, so that we've added it to our toolbox of models, is the way that it reacted and the consistent closes above former resistance levels that are now becoming support. It is for that reason we recommended initiating a long position. We have our stop in place. We have our exit strategy if it moves higher, and I believe that it should be a profitable trade for us. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.